Hello, everybody. Welcome back to the first episode of Not Financial Advice, where we will not be giving financial advice, but we will be talking about finance, the macro, investments, all that good stuff. I'm here with Sean from Sean to Invest to Live. Last time we did a video, we reached 30,000 people, and a lot of people got to know about this former IBM employee's thoughts on Palantir. I think that title just like it got people, and then your voice got them to stay because of how like awesome your analysis was. So we figured, why don't we start a podcast, see how this goes once a week, and just talk about the macro investing and all that stuff. You guys probably know me. This is my channel. My name is Amid. Sean, for those of you who don't know, he's worked in the data analytics space for a long time. He's been an entrepreneur. He's built multiple companies. He does a lot of investing on the side. He is someone that is one of the few people that I truly deeply respect when it comes to just talking about finance and investing because of the wealth of experience they have and the communication skills they have to actually talk about a lot of things that are going on in the macro. So Sean, happy to be with your first episode. I guess my first question is, what the hell is going on in the macro? We had a little bit of a bounce for the past 2 weeks, nice little maybe dead cat bounce. Today we dropped down about 4 or 5%. What are your overall thoughts? What's going on?
I think at the end of the day, there's two things that I'm always looking at, right? The market wants to be like water. It wants to flow and it wants to get as level as possible. And the more we see whipsaws on the ends, the more the middle has to round itself out. So every time we get a couple up days, we have to expect a couple down days. And I think that the more you stand back and realize that we're just in one gigantic ocean made up of an ecosystem of different factors, the better we're going to be, right? There's some fish, there's some sharks, there's some rocks, there's some coral, there's seaweed, and there's all kinds of stuff in there. And it all has a place and all ultimately ties together as one ecosystem. And the more we start to understand how they tie together and how they work together and why they're important to each other, the better we are as investors in understanding where and how to find that level and where the best place could be to do some fishing.
So the bounce we've had over the past 2 weeks, do you think that was just the irrational nature of it flowing in the water and kind of doing what it does?
I think that we are in sort of what I would call, I hate to use this term, Amit, to be honest with you, but these are somewhat unprecedented modern times. But I think the key here is that it's a modern thing because it isn't that we haven't had terrible things happen. It isn't that we live through tough times. What's different now is they're flowing and they're flowing fast. So markets traditionally would have waited for, the major players to make their moves, 50, 60, 70 years ago. And by the time it got to financial advisors and then to retail traders, although there weren't many in the first place back then, by the time you were really into that move, it was pretty well settled. The prices were fairly where they were going to be. The problem now is we don't have other people analyzing and delivering the analysis to us. We're getting just raw information.
Right.
So we, as retail investors, many of whom are doing this for the first time, or maybe don't really understand how to look at the connections beyond the first layer, that secondary, that tertiary relationship of data. What happens is there's a lot of this, like things might go up, pile in, things might go down, pile out. And then of course we mix that with a little bit of diamond hands. We mix it with a little bit of crypto issues. And before you know it, you've got huge volumes of money sloshing around. And when people get scared, they react quickly. So there's a really good part of what I said and then a really scary part. The good part is we're not being told what's happening. We can look at the raw data. We can understand what's happening, maybe even why it's happening at a little bit of a level. And this is great because what was happening for many years and why people got so frustrated with Wall Street in general is by the time they were told what to do, the banks already made their money and you got left buying it high.
Yep.
The problem though, man, and this is a huge problem, especially for us who are on YouTube and on social media. The big problem is you got to be careful who's doing the analysis and if they even know what they're talking about, frankly. And a lot of times we might think we know what's going on, but we don't have the full story because we saw 240 characters, not a 240-page report on it. So, I think there's a lot to be said that a powerful and strong investor nowadays is someone who takes the time to understand the large scale implications of what happens, right? I'll bring this back to a quick point. When the Suez Canal was blocked a while back now, no one's even talking about this anymore. In that moment, many market macro traders, myself included, were looking at this and thinking, well, geez, we're blocking a major shipping lane for weeks. That is going to be years of lag time before that actually hurts us because there was already plenty of stuff on the way at that moment. So these are the kind of things where becoming a good, strong investor is understanding the long leg of an event, right? A terrible incident the other night. Shinzo Abe got assassinated, absolutely atrocious. Well, we're dealing with wars with Russia and Ukraine. Well, we're dealing with food crises and energy crises, and we've got Texas going on blackouts and California doing stimulus checks. It's like, man, how do you take this tornado of data and figure it out? That's, I think, what we're really talking about a lot on this show.
I want you to tell me if my analysis here is correct. I believe that the macro is in such a turmoil. Reports came out today that CPI data is expected to be worse than it was last month.
Sure.
That if earnings for companies, Q2 earnings are in the next 2 weeks, are really good, let's say companies just hit it out of the park, then the market is really confused because they can't justify to their portfolio managers and clients that we should sell the stock because the stocks have done well. But the macro is saying sell, 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 sell. Versus if earnings is really bad, like Facebook just craps the bed, then it's much more easier to sell off the stock because the macro sucks as well. So is the market looking for like a cohesive narrative? And if earnings are good, that cohesive narrative becomes not cohesive?
Yeah, it's an interesting way to think about it, I suppose. I think number one, the problem with earnings is we have company guidance and then analyst guidance, right? These are really almost diametrically opposed to some degree in terms of how you think about it, because when the companies are coming out, they're basing on what they believe, based on their projections, based on the forecasts that they have internally. The analysts are just saying we expect certain growth rates across industries based on the way this company sells or does their business, whatever it is. We expect to see these results. I think that when we're in times like this, the challenge is that the reports we see when they come out are high level, like what the EPS was, what the margins might have been, right? What the growth or loss was. But the problem is we're not, I don't want to say we, because I don't want to overly generalize, but the majority of people who are going to see these reports and then take that action, you just mentioned that, okay, I'm selling. It's a tough market and it's a tough company time.
Right.
There's a problem because we don't know to what degree within that earnings report things have been differentiated oftentimes. And I'm going to tell you some real world examples here. Big tech companies, right? They can see that earnings might get hurt. The first thing they do is they start to crush T&E internally. T&E's out the window. Travel and expenses are out the window. Start saving.
I was about to say, what's T&E?
Yep. Guy got it. I got you.
So this is why you're here.
Yeah. Well, and this is the key is most people aren't seeing the other side of it. So, the first thing you want to think about is like, where are we spending that we don't have to be? Well, travel and expenses. Okay. That's an easy one. So that's going to help bottom line margins, but it's not going to help top line, but we know that. So then the question is, okay, what do? Well, they might want to pull forward deals from Q3 that we weren't expecting. So we might have to offer special incentives. So does this mean margins shrinking, but earnings are good? Does this mean earnings are good, but we held our margins? Those are the deeper questions I want to understand when I read a report or dig into the details, because what I don't mind seeing is a tough economy, but an even tougher company who's willing to stand their ground because they have a great product, versus a company who has to go to the mattresses and discount the hell out of everything they sell just to get some deals over the line to maintain the analyst recommendations or what they expect to see. Now, full stop, I'll give you a real fair example. I talk to a lot of folks in procurement on a day-to-day basis. What we're hearing across the board is pretty simple stuff, right? We're trying to save where we can. We're going to push things out if it makes sense, or we need better discounting, right? That's across the board for everyone I know who works anywhere and does any kind of a job where they're selling something.
Right.
Now, again, I think the problem is when we whipsaw react to near-term things based on near-term environments, you make a lot of mistakes and you leave a lot of money on the table. But I also think that the problem is we all want to invest like we're hedge funds, but we don't hedge our bets. So there's
I know you're passionate about this issue.
Well, it's just, there's some stocks that you and I have spoken about publicly that, so I think that the challenge is that everyone believes and has conviction that if the markets are terrible and the earnings are going to be bad, it's going to go down. Well, for Christ's sakes, the market's been going down for months. You've already missed the down. Now, sure, we might see another leg, but is this really a reason to say I'm totally out? It's not worth it. There's no upside or there's too much risk. I don't know. I mean, that's going to have to be where you do the research and dig into the details of each individual investment you're thinking about making. And the other thing I just want to throw out there too, as part of this thought process, is when we're talking about that large scale macro economy, forget about individual earnings for a second. I think that there is and always is, and irrespective of the kind of economy we're in, there are companies that operate with really good, really well needed products that will continue to grow because the population continues to grow, contrary to all things we keep hearing about from Elon, like people are still buying stuff. And I think that's a consideration to take, is that at some point, there's just certain things that exist in our economy that we need to have, and they're going to continue to sell. Like people are going to keep buying toothbrushes and toothpaste, right?
Yep.
We're going to keep eating. We're going to keep having to have a places to live. So if you were to approach this as an investor and just say, look, I think that there might be a handful of REITs that are going to do better than all the other REITs. I think there's a handful of consumer goods companies that are going to do much better than everyone else. And it's okay if they go down a little bit. They typically are paying some sort of a dividend, or there's some sort of good reason to get in, or you can DCA or dollar cost average into these positions. This is where I think the average regular retail investor doing it for themselves needs to be thinking. Now, I think if we peel that layer back and we've got sort of the next level of retail investors who want to go deeper, they want to really dig into the details. They want to look at those numbers. Well, now the question is like, let's talk about sourcing. Let's talk about hiring, right? Like, is this economy finally going? The CPI point you made a minute ago was perfect. Okay. You didn't set that up, by the way. That was a perfect setup though. Because what we're trying to understand is all these companies are competing for the best talent. They're competing for the best chips. They need the best manufacturing. They need the best route to market. They need the best advertising and marketing. And so it's unfortunate for a lot of people to hear this and they hate hearing it, but some companies just do this really well and some provide those services in a really great way. I started a debate earlier today where, oh gosh, I don't want to butcher. I think AMD got downgraded or got a price target reduction, right? Is that it, right?
Yeah. Yep.
And someone was saying like, I can't even buy a car because there's no chips. And someone else was saying this makes no sense, or we're not going to need chips in the future. Well, listen, I'm not a huge crypto guy, but with crypto prices down, people not buying new machines for mining, that's a huge part of their business. Now, huge might mean 5%, but 5% is a huge piece on earnings.
Yep.
So there's always another layer, right? And that's what I think so often we get missed. Now, the flip side is for those people who say, aren't we always going to need chips? Yes. That's why you invest for the long term and don't worry about it unless you're looking to get out short term.
Right.
So I don't know. I don't know if I answered the question directly, but there's a lot of considerations in there.
No, the question was that you have to look at a lot of different variables. And even if earnings suck for a company, you have to look at, is this company going to be around in the long term? And if you have conviction in that, then you potentially keep going with it. And if you don't, and you change and you adjust and potentially hedge your strategy. Speaking of Meta, which is one of those companies that you and me both love to analyze, Zuckerberg recently came out and said to employees in a Q&A session that he thinks one of the worst economic downturns in his lifetime is coming. They are not hiring 12,000 engineers. They're now scaling that back to about 6,000 to 7,000 engineers. Given, I know you're in the sales, advertising, analytics world, do you have any insight to give on ad spend? And second question, if Zucks is thinking it's going to get bad, do you think he's seeing across the board advertisers are lowering their budgets, which is typically what happens during a recession?
Yes. So right off the bat, one of the first things any major company looks at coming up to or even approaching a maybe recession, because I don't want to definitely say it's going to be, advertising is the easiest place to cut, as is hiring, right? They're still going to keep hiring, but they're going to slow it down. That's a known capital cost. It's already built into the numbers. Those aren't surprise things. So it's okay. It's an easy place to cut. It's very much like the T&E earlier. There's just certain things we can slow down to have a near-term direct impact on the projections for our business. Now, the ads piece is really interesting. This is a place I spend a lot of time on in my 10 hours a day that I work. So I think the way to really approach this is, although advertising will get cut, it's not going to go away, right? So step one, we're going to see some tightening or some constriction. The next piece of it is we're going to then want to understand, okay, who is providing the most bang for the buck or the best ROI for everyone who's out there doing the advertising. And, I know Meta is like the company everyone loves to hate. But the reality is the bang for the buck on advertising within Meta has been pretty damn good. I mean, that's why they consistently keep doing well. That's why we consistently keep seeing growth there, because
they had 26 billion of ad revenue in one quarter last year. That's insane. Last 6 months.
That's insane, right? And considering everyone says no one uses it and it's useless and there's no reason to do it, I'm gonna be like crystal clear in this statement. I can't even tell you how many senior executives I speak to who look at every single penny of advantage they can find. They're looking at CPM rates. They're looking at budgets versus actuals. They're looking at forecasting deep based on those advertising dollar spends. There is a reason why some of these companies that seem to always be in front of the Senate, always in trouble, just keep on smashing away because they're getting results, and those results are measured. So this is like that super common theme of people who aren't in this world where they say like, Facebook sucks and no one's using Meta. No one wants the metaverse. Yeah, I got news for you. They do. And the data shows that they do. And the ability to have unbelievably custom approaches to advertising, this is a really big, I did a video about this, but I want to step back because I think this is worth you and I talking about for a second. So I'm going to finish the answer, but I want to talk specifically about the meta and where advertising could work there. I don't know that it will yet, but could. So then the question becomes, when we look at our consolidated advertising spending that's getting optimized, because that's really, I think, the right word to use. When things get tight, we don't cut spending, we optimize spending. That means the fluff and the edge we can get rid of. We focus on the main stuff. So what's interesting here is it has to become like, who are the primary buyers? Stop hunting for new buyers that don't fit the profile of a lookalike or a cluster-based campaign. And it really gets to the point of, where does it work? How does it work? We A/B test it, all these kind of great things. And then these are the players who are going to win from it, right? Like, is Google really, are people going to stop advertising on Google and YouTube? Absolutely not. No. It might mean that less of the scammy stuff is in there, because those are the people who aren't going to be able to make money during a downturn. If you're selling, a
$497 options trading course.
Let me tell you, man, I keep getting this same ad for the past week of this dude who's like, what would you rather have, this laptop or this house? Well, obviously the laptop. I'm like, no, dude, I'd rather have the mansion you're showing in the background. And I'll just buy a laptop after. I mean, my God, come on. I get your scam. I get it, man. But
that's like the whole, would you have dinner with Jay-Z or would you have 500,000 cash? It's like, yeah, I'll take Jay-Z would tell you to take the 500. Right?
Yeah. Stop it. Just stop. Those are the kind of ads that are going to disappear. Because the stone cold reality is we're hitting an interesting time in that space anyways. But to talk about meta for a second, so I think it's an interesting sort of diatribe we can take here. For those who don't spend a lot of time looking at ad spend, I know we're sort of all over the map here, but if you don't spend a lot of time looking at ad spend, I'll give you a basic idea of how it works. You can tell if someone interacts with your ad. Maybe you click a link, or you look at it, or you click to expand a post to see more about it, or something to that effect. And then you can track maybe another degree of separation. As an example, perhaps the degree of separation is, after they came to my link, did they click 4 pages or 10 pages or 20?
So Sean, let me do you one solid right here while you're speaking, because this will really get people. So here we go. This is what a typical Facebook advertising manager looks like. You have your name of the campaign, delivery, your ROAS, return on ad spend, budget, results, reach, impressions, cost per result. I mean, granular data to figure out what's working, what's not working.
And this is also pre-analytics. This is just diagnostic descriptive, right? So this is sort of like what you did, what happened from it. Exactly right, though. This is exactly the thing. You can see what they did with your ad, how they interacted with it. You can take it a step further and see, okay, once they clicked the ad or engaged with the ad, now they visited certain pages or downloaded a white paper or downloaded a trial or watched a video on your site. And maybe in some cases, let's say it's a clothing company, right? Okay, I came on, I bought a shirt. It's got a coffee pot on it, and they know that I bought it, but now they don't know from there, right? There's a point where advertising now stops and we lose information about that client and the process. The power of a potential virtual world with advertising integrated in it, or even purchasing integrated into it, is we now not only can track from an analytics perspective, not only what you're interested in, what you bought, but what you're doing with it, how often you interact with it, who else sees it, what those other third parties might look like. So it's kind of a silly example, admittedly, but let's say you and I go into the metaverse and we're doing this show now in our meta house within our meta studio, right? Mm-hmm. And, we buy our little, my kids play Roblox and Fortnite, right? So Fortnite, you can buy skins. I think anyone who knows that is familiar. You can buy skins, a little different axes and stuff, and you can wrap the weapons in different kind of skins. Same with Roblox. You can customize your figure. You can use real Robux that cost real dollars, and you can go and get custom looking figurines or whatever you want. So that's sort of step one of oh, I get what you like to buy. I get how often you use it. I get who you play with, and that might influence them to buy it as well. But that's still only really layer 2, maybe layer 3. As we go deeper into this from a tech perspective and a data perspective, what begins to get very interesting is now maybe I listen to certain songs in the metaverse. Maybe I want to put certain types of furniture in my little fake house, and I wear certain types of outfits when I go out in the metaverse. And I know, listen, I'm 39. I know how silly it sounds when I say these things, but the reality is the internet was also not supposed to work. And then Facebook was never going to work. And then people don't want to watch videos that are only 15 seconds long, but that's crushing it. The reality is people want to interact with things in an interesting way, and they're already doing it, right? The biggest the biggest reason why people say the metaverse is BS and doesn't do anything. It's like, well, who wants to live in a virtual world? It's like, okay, how about like I can't think of what's the Nintendo game, something crossing.
Legends, Animals Crossing, I think that's the name of it.
Whatever it is, you build a little house, you have to get a mortgage on the house, and you have to remortgage your house to build a bigger house. And I'm watching my kids play this game, and I'm like, wait a minute, hold on. You have to like work the land, go fishing, then you have to pay a banker a mortgage in this game. I was like, this is my real life in the real world.
Yeah.
And it's perfect because they can track everything you're doing and they can understand your habits and your behaviors. With the metaverse, it's even deeper because they can not only advertise to you in there, they can track usage of the products that you buy. I'm talking not about Facebook, but about those advertisers.
Right.
You buy a shirt and you wear it a couple of times, and now you want to get a new shirt for your metaverse nightclub that you're going to. So anyways, not to take you on a total diatribe on it, but there is layers of data that this introduces advertisers and companies to in product usage data. In the B2B world, it's different. If you buy a software product, I can track license activations, daily logins, monthly logins, activation rates, overall usage rates, right? All these kinds of things are tracked back because it lives on the cloud somewhere and you pull down all that info. Consumer goods are very hard to track. This is cracking potentially a whole new world of what and how you can get to that data, get access to that data, and track the usage of those products within it. So do you
think it's okay for Zucks to be taking the losses they're taking on the metaverse spending because of how big the potential is you've described? So like investors have to be ready to see on the earnings that there's some losses because of that?
I think that I'm going to ask you a question. If he doesn't and just keeps Facebook the way it is, do they ultimately beat their competitors?
Well, this is the interesting thing because we know Apple is coming for the headset and they want to control the hardware and the software. And, if Facebook doesn't, then Apple controls and their next S curve of growth is there. We don't know if it's going to be successful, but there's a good chance because it's Apple and they might pull it off.
Yep.
So Facebook just becomes a assimilation of or amalgamation of blogs and news magazines, which is literally just my feed and a couple of posts from my friends.
Agreed.
Then maybe it dies out eventually like Yahoo.
Well, and it's funny because like when I think about what Facebook is today versus what it could be tomorrow, we're talking about a totally different company. And I think that he's, I get that people don't like the dude and it's fine, but he's obviously extremely, extremely intelligent and sees something based on the data that the rest of us don't. Yes. What I know about Facebook is this: they're collecting data on everything. And I really doubt that they're going out there and trying to make this thing happen with no information. Right. That's what I doubt. So, I'm not saying that that's something that you should invest in or not invest in. I'm just saying
it's not financial advice.
It's not financial advice. And it's an interesting call out because this is part of what big long-term macro investing is this a trend that will fundamentally change the way we interact with our friends, the way we talk to our family, where we go to hang out, how we interact with products, where we play video games, where we work out, how we get advertised to and buy things. Like if I have a headset that doesn't work for years now, but if I put this thing on my head and I'm playing this game and I get an ad for like a Domino's cheese pizza or something, and all I have to do is shoot a little missile at it. I mean, now it's not only fun, but now there's a pizza coming to my house. So it's like, when you start thinking about the scale of what you can do, it's pretty insane. I want to tie this back to one thing and then I'll give it back to you. This is going back now, probably, I don't know. This is going back to 2016, 15. Oh, wow. Longer than I thought. So over 5 years ago, I had been in an angel investing group in the New England area. And one of the things we were starting to see was a lot of people pre-building advertising in augmented space or the VR space. I think the reason VR didn't ultimately take off the way they thought was the technology was too clunky and there wasn't enough to do in it. But they were already figuring out ways to have non-invasive product advertising.
Right.
They were just too soon. It's sort of like Amazon before the bust. Like, great idea, great execution, tiny bit too early, but that's why they lasted. Ever since seeing those, and I'm talking literally 2015 here, ever since seeing these folks who were like way ahead of the curve, I haven't stopped paying attention to it. I'm not invested in that space in any way, but it's one of those moments where you're like, what are you seeing? Why are you investing so heavily here? And as I started to look at more and more of the data, then of course, Fortnite, Roblox, these are just miniature versions of what they're trying to get to, which is more not all inclusive. What's the word I'm looking for? More
more like kind of cohesive advertising, because a Facebook ad feels natural. Like it just has a little
yeah.
sponsored right up top. You don't even notice it's an ad, right?
It's true, man. Like we talk about this with Twitter all the time. When you're scrolling through Twitter, you know it's an ad.
You know it's an ad.
Yeah, and you're immediately past it. And actually, what I do is I just block them all.
Yeah.
So I don't have to look at them again. And that's a terrible feature to allow, by the way. But neither here nor there. I get why they do it. But yeah, we'll see what happens, man. I mean, I think at the end of the day, we're going to see people engage in things in different ways, right? I mean, I see some of the commercials where they're doing the workouts and they're shooting at asteroids and stuff. And like, I mean, like, can you honestly tell me that no one wants to do that? Come on. Of course they do. Like when I get on the Peloton, I like to do the ones where you can like pick a location somewhere in the world and you're driving through the streets. And however fast you go is how fast the video goes. And that's only a microcosm of it. But it's just an example of like an all embracing experience where I get to live and feel like I'm there, like driving next to the Eiffel Tower. It's an amazing thing. It's cool to see all this stuff, you know?
Right. Okay. Well, on to our last topic of the day, because this topic deserves its own topic. And I know you'll have some thoughts for this. You talked about Zucks having a lot of information and seeing a lot of data in order to make this calculated hypothesis that the metaverse is going to be their next $1 trillion opportunity.
Yeah.
The crypto companies of the world seem to not have that much data when making their $1 trillion market opportunity hypotheses. BlockFi basically going out of business or having a credit line from FTX.
Yeah.
Voyager completely gone bankrupt. Celsius gone bankrupt. I mean, what's your raw take about these crypto companies that have completely and utterly collapsed and left many, many, many retail investors holding a pretty hefty bag right now?
First and foremost, I feel terrible for the people who've lost money here. This isn't like fluff for a video. I really feel bad for everyone who loses money in the market, because I think the vast majority of people in this space who are losing money, regardless of whether it was to get a Lambo or pay your monthly bills, right? It doesn't matter what the outcome was expected. You were doing it based on information that was being given to you by lots of parties. There's a lot of very big, well-known YouTubers, as an example, with big following who are nothing but crypto, all day crypto, driving crypto. And they're getting sponsored by these companies and getting paid by the companies. I'm not talking about FTX. I'm talking about some of these other ones that are out there. And I look back at it, I'm like, man, like you got rich.
Yeah.
And what's scary is it wasn't like this was hard to see coming. And again, I'm going to go back in time a little bit to build up to the thesis here. When I first started mining, actually stuff's still behind me. I sold all the GPUs a long time ago for costs, by the way, which is amazing. But I still have the motherboard and all this other stuff here. My first interactions in and around crypto was on Stellar nodes, because IBM was actually using Stellar nodes way before anyone knew what they were to work on some blockchain type projects. Nothing crazy, just the early adopters to technology like they often are. At the time I had a buddy who was like, hey, you can lend your Bitcoin out and make good money on it. I was like, well, yeah, but like what happens if the price crushes? Then I lose all of it and they can never pay it back. And he's like, no, there's total guarantees. I'm like, by who? There's no guarantees. And of course, come a couple of years later, right? 2016, 17, I watched this thing go straight up. And then we all know what happened. It crashes back down again. This is just like the housing crisis. This is just like the 01 crash. This is just like the financial crisis in 08. It always happens again. And it's as soon as we get to a space that has exponential explosionary numbers that then collapse in itself and brings everyone down with it who isn't properly prepared for it. Yeah. So your specific question, this is what I think. If you have a basic understanding of how lending works, this is what you know. There has to be a huge margin in order to offer loans, because these companies have overhead. They have to do their own things, right? I'll give you just a quick example. Is the reason why you get such a low interest rate on your savings account in the bank is because they're not lending money out for all that much in the first place. And they still need that huge buffer because they have overhead. They have to pay their employees. They have to pay for rent. They have to pay for technology, et cetera, right? And by the way, massive risk mitigation departments. Think about like Bank of America, JP Morgan, et cetera. I mean, they spend insane amounts of money on risk mitigation and tracking and all this other stuff, and cybersecurity for that matter as well. I don't remember when this was, a few months back. Sam Bankman was being interviewed. I forget the name of the podcast. I tweeted it out a while back, whatever, where they were basically like, well, wait a minute. You put money in you get a huge amount of interest out, and then other people have to put money in, and that's where the interest comes from. He's like, yeah. And they were like, well, that's a Ponzi scheme. He's like, no. They're like, I put money in, and then someone else puts money in, and you pay me that money, and then the next person comes in and gets paid that money. And he's like, oh yeah, that does sound like a Ponzi scheme, actually. Just money out of nothing. Right. And he was laughing about it, and they were not laughing. Yeah. And they were kind of like, how is this isn't going to work. This isn't sustainable. And it sort of played out exactly like what we've seen 1,000 times before, where these companies are offering insane kinds of rates on crypto, but there's no regulation, there's no protection. And all it would take is anyone who's not caught up in the excitement to say, well, wait a minute, how could you possibly pay me 20%? 18%.
Sean, to give context, it's really difficult to get a 20% return on anything, right?
Insanely
not easy.
For an interest rate, it's insane. You can't.
Right.
It's unsustainable completely. Yeah, you can't.
So the whole nature of crypto technology with all these different lending firms that raised billions of dollars in venture capital was like, you put the money in, you stake the token, and they create their own token, and that creates the liquidity to be able to pay the interest rates. And it's like, you saw this coming from a while ago, just given your experience, I'm assuming, and you thought this was going to come crashing.
Yeah, well, yes. And this isn't like one of those moments where it's like, see, I told you so. Like, right. It's not that at all. It's just like when Bernie Madoff went down, and I think a lot of people know this, but I want to say it for those who don't. Bernie Madoff was basically one of the largest Ponzi schemes that ever existed prior to what's happening now, funny enough. And all he was delivering was 1% per month. And that was it. And 1% a month is so insanely good that no matter how smart you are, people are like, take my money and give me 1% a month. I will live like a king forever on 1% a month.
Because that's 12% a year, basically.
Bingo. It's 12% compounding growth a year. And you're going to be very wealthy with a 12% guaranteed return.
Right.
And that's why so many wealthy people and funds and 503Cs had their money with him, because 12% was like just enough to feel like he must just be really smart and really good. Right. That's why he can do this, right? The thing with the crypto lenders was really interesting. They came out, Celsius, I think, was one of the biggest ones, who was like, we are not the banks. We're going to give it back to you. So 18% to anyone 10 years ago would have said like, it's obviously not doable. It's clearly a scam, right? But you're like, well, I mean, I can get 12% if I do covered calls. So 18% doesn't sound like it's that difficult. Right. And then all it takes is asking yourself, like, I know it's a super funny meme, but like Michael Scott in The Office, when Jim's drawing the okay, so these people at the bottom, and then these three, and then these two, and then this one, he's like, the pyramid, he's like, oh shit. And I think about that all the time I don't think a lot of people even believed that it was real. I think there was sort of a feeling of like, if I can do this for 2 years, make 20% of my money, I'll get out. And then I'm out. But the problem with the entire way these things work is it requires you to not only keep your money in, but to have constant new money coming in. Otherwise, you can't maintain 8% margins. And in the beginning, I do believe a lot of these firms thought they could beat that rate because of the growth rates in the market.
Right.
But it's a concurrence of events. I want to pull my money out, the market's going down. Then the death spiral begins, and the pressure and the vacuum of the downward pull accelerates it with every withdrawal. Now, what makes this exceptionally different than anything we've ever seen before is that even after being scammed, people go back in and get scammed again.
Yeah.
And like the Luna thing was absolutely insane. Luna Terra, whatever it was, where essentially people lost like tens of billions of dollars, way bigger than what happened with Madoff. And then like 3 days later, they're like, it's okay because we're coming out with Luna 2.0.
That was insane to me. Bro.
I mean, and then what did people do? They literally threw their money in. And it's like, oh my gosh, guys, like you're throwing your life savings, your hard-earned capital away. And the reason wasn't because they're dumb. These are not dumb people. Like, the reason they did it was because when you lose all your money, what's the first thing you try to do? Get it all back.
Yeah.
And the easiest way to get people's money back is to take it from them again for a second time. And, I guess that's sort of where we are with this whole thing, that like in hindsight, things, I want to phrase this the right way. A good investor looks at the history and gets better from it. A great investor looks at what could happen and ties it back to the current time, right? So your ability to see into the future and identify risk is where you'll find your returns. I mean, listen, I don't follow crypto, but imagine if you had shorted Terra Luna, you and I would be billionaires sitting on a yacht, because that would be like an insane, imagine the rate of return on a total collapse, you know? So it goes. But like you said, these weren't like fly by night companies. These were backed by VCs, billions and billions of dollars gone, eliminated from everywhere.
Bitcoin, I think you and me can both agree, is not going to collapse per se. It's not, I mean, maybe, but it's likely going to be around. So it seems like Bitcoin's moving with the NASDAQ. If we have another bull rally, S&P goes to 490. I mean, Bitcoin would, it seems very obvious just looking at charts, it would follow that. So do you think if crypto is obviously here to stay and Bitcoin and assets like that are going to stay, the exchanges that we're doing this crazy 18% APY, those are going to die out when we have the next bull run? Or do you think they're going to pop up again and people are going to just do the same thing and it's an ongoing cycle?
Yeah, you know, I want to tell you, I think that people are going to be smarter this time, but unfortunately, I know that that's not the case, because what's inevitably going to happen is that people are going to chase the shiny object. And in the world of finance, it's insanely high interest rates and returns of capital. I think there's a point of demarcation that we can speak to briefly here, because you just called it out. Like, forget about the fact that there's like 20,000 plus crypto coins out there, right? Let's just call 19 of the 20,000, 19,990 are complete and total garbage. Maybe
they're called shit coins.
Yeah, right, garbage. maybe 8 out of the 10 that are left could have some feasible use, but realistically, there's no need for them. So for me, like, gosh, I know people who love Cardano and Solana are going to be mad when I say this, but like, really, it comes down to which system do you believe works? Is it Bitcoin and their blockchain and networks, or is it Ethereum and their blockchain and associated networks and contracts? And I think the one thing though, man, after being in this thing since I got in 2016. I also got out, thank God. Why isn't there adoption of any of this stuff in real companies? And I talk to everybody. And everyone who hears that, you don't get it. You don't understand. Let me tell you why. And the problem is, like, again, it comes down to a fundamental misunderstanding of monetary systems. I'm not talking about fiat. I'm talking about transactional systems between people and companies even, right?
Yeah.
Like, the value in scarcity of Bitcoin is only important as long as it remains non-transactional. People are going to blow this up for me saying this.
What do you mean, as long as it remains non-transactional?
Sure. So if we're using Satoshis, right, a small piece of a Bitcoin, as our regular money to buy our Starbucks coffees and our Dunks and our McDonald's lunches, that constant transactionability creates volume. That volume creates stability in pricing.
Right.
That means the huge gains go away. So do people really want to be in crypto without getting huge gains? I don't think so. I think they're in crypto because they want huge gains.
Right.
The reason why stocks, large cap, mid cap, regular stocks of big companies don't whipsaw unless there's huge events that happen, right? But there's always an anomaly. So push the anomaly aside for a second. And even then we have circuit breakers to stop it.
Yep.
The reason why like QQQ or VTI doesn't have 40 or 50 or 70 point drops is because there's so much volume that you have a bid and an ask that's so packed that there's no buyers big enough to make it move one way or the other. The problem with crypto in its entire go-to-market is that the very value in it is not using it. Right. So like Elon came out the other day and said, oh, you know, Dogecoin can be used for the Boring Company. The Boring Company. What? So a gigantic infrastructure-based company will accept Dogecoin. I mean, like there's no commercial use for that. So what they mean is like, oh, if you and I want to go and take a drive through, they'll take Doge. Right. It's like, cool. Will you just take a credit card and I can just swipe it? I mean, can I do that too and get cash back on it? Because that's what I'd rather do. But again, the purpose is all these people who have Doge, I see it on Twitter. They're like, holy shit, dude, we are going to the moon, baby. And what I'm trying to say to them, but I get attacked every time, of course, is I don't think you know how money works. Is it a commodity? Is it a currency, or is it an asset? Because if it's an asset, it's useless without stability. If it's a commodity, it's useless with scarcity. And if it's a currency, its only derivative value is in transactional sources. And then you have to have price stability, which is built in automatically. If everyone started using, I don't know, pick your thing, Bitcoin as their way of conducting transactions, and there's billions and trillions of transactions a day, well, now the price stops moving. Why not just go back to the dollar then and just
That's a good point. I've never thought of that, to be
honest. No one is thinking of this because it blows up the whole point of why you have it.
Yeah.
I mean, if the point of it is to replace the monetary system, but it has to operate identical to the monetary system. And, you know, people, I get this, dude. Every time we talk about this, before everyone starts commenting on it, let me tell you what I get all the time. Oh, yeah? Try going to a third world country.
Yes. What's the response to this? I'm very curious about this one.
Sure. A third world country where they have an iPhone, a crypto wallet, and a place to transact that money with Wi-Fi connection in real time so it can actually hit the blockchain. And, by the way, pay the fees for that also. So just so I understand, there's no banks and there's no ATMs, but there's great cell service. Okay, perhaps.
Maybe.
But that also means the same people who have to now get it, that means their shop has to have a transactional system to accept and convert, which then means there has to be another ecosystem for them taking that money and paying your bills with it.
Right.
So the problem with, and I'm not saying this can't happen, because I think it's a great idea to have a secondary, unique global financial system makes a lot of sense as a form of transaction, open borders, all that kind of stuff. And I also think, by the way, the government's tracking this stuff anyways. So it's not a question of like being private or pirating at this point. They can track the wallets. Being done on a regular basis.
It's not really decentralized.
It's not decentralized, and it can't be decentralized because ultimately someone has to mine it. Yeah. And who's mining it? It's publicly traded companies trading in US dollars.
Yeah.
Right. So I love the idea of what it is. I love the idea of what it's tried to be. Where I really think the play is not in, I think, like all things, we always miss the boat. When Bill Gates, who is like now apparently one of the most hated people in the world, but like when Bill Gates came out way back when, I want to say it was 95, I might be a year off on that. He came out and was ridiculed because he said, the internet is going to change the world. I'm moving towards being relevant in the internet. I remember him going on late night TV and they made fun of him relentlessly. And then when things crashed, everyone was like, what a dumbass. Same with Bezos. But the problem was there's a difference between being wrong and being right, but wrong on time. Right. And I think some of the biggest geniuses that we're seeing right now are just wrong on time on certain things. So to me, the future of crypto is not crypto as we know it. I think the future of crypto is in the ability to track and have verifiable things we can do on the blockchain. But it's not going to work until every Tom, Dick, Harry, and Mary stop creating fake shit coins every other second of the day. And then people keep buying them, trying to get a 20,000% gain in 18 minutes. And the problem is, though, it's really easy to make a story and an ad where you show yourself in front of a lime green Lambo talking about how you made an 18,000% return on Shiba Ding Dong Kangaroo coin, right? Like, come on, right? And
that's going to be a clip. That's going on
I
Twitter.
Don't even know.
That's
that just came
Twitter.
to me. And yeah, man, that was, my brain's tired at this time of the day. But that's the thing. Like, imagine if instead of the US dollar, we had 18 different currencies in the US, and some stores only took one and some took the other, and some had to pay this and some had to pay that. People would be like, man, don't you wish we just had one? And the question is, do people really want to have to transact in fiat, multiple coins, plus blockchains, plus multiple apps? I mean, come on, man. It's like, I think there's a place for it, but the way we've seen it today is the wrong version of it. And by the way, this goes back to the whole point of what we're talking about, is that when you're looking at macro trends, you have got to have the ability to look into the future of what is going to solve the big problems today. And this is a great example of, we need to be able to track medicine safely. We need to be able to track voting, weapons, whatever. Pick your poison literally too. And that's the value of knowing every stop on the way being on a permanent ledger as it applies to it. And a lot of people are trying to do this. And the thing is, demand hasn't caught up to the solution. So the question is it not working? Is it not working today? Or do we need a different version of it to work tomorrow? And that's up to everyone who watches this and thinks about this to decide who's the promising player in that space. But all I know is that there's publicly traded companies who are literally in the business of mining Bitcoin that then just gets held and nothing is done with it.
Right.
And again, to the point, like, it didn't even hedge against the crash of the markets. So the entire thesis of an asset or a non-corollary asset completely went in the crapper as well too. So it's like, I don't pretend to be a total expert on crypto. I feel like I probably know it better than most, even though people talk louder than me on it. I'm certainly not an expert, but I look at it from the standpoint of like real world application. And the reality is there's a million ways to do these things that are easier today with what's already readily available and in mass available as well. And the question is, like, you guys were talking about the other night on your Palantir show, where the more and more things we see for jobs, where you have to have those skills, then the ecosystem grows, becomes an organic growth, becomes an organic need. And then all of a sudden it's like, hey, wow, I want to use this. And it's easy to find a developer, and it's actually easy to get a developer started. It makes more sense to try it, right? And you start to have that upward spiral. The problem with blockchain is there's so many different versions of it with different breakoffs and different bridges and different tie-ins, that if you're the CIO or CTO of a real company, it doesn't have to be publicly traded, but a real company doing real revenue, do you want the headache of trying to figure out how to do all this, plus have to hire extremely specific talent to do it? I don't think so. I know tons of CTOs. I talk to everybody. Like, they're not interested in bringing in yet another edge-based technology that may or may not do something useful potentially someday. So it becomes a question of like, is this just a new version of a gold mining company that gets publicly traded, and then we simply get a piece of gold at the end of the day? That's what it looks like. I don't think that's what it is, but that's what it looks like right now. And until someone comes along who can really differentiate the value in a real world capacity, it's just another thing. And what I would argue to anyone who wants to have the argument, again, I'm going to reiterate this because I think it's important. The entire design that we're working to getting, it defeats the entire growth of what we're trying to get to. So you can have growth or you can have stability, but you can't have stability and 10,000% returns. Sorry. That's my thoughts on that point.
And that is not financial advice. Thank you guys so much for listening and watching the first episode. We hope you guys enjoyed. We'll probably be revisiting crypto and getting more of Sean's thoughts over the coming weeks. I know we talked about Facebook today. That's a topic that me and Sean are passionate about. So leave comments below about what you guys would like to see, what stuff you would like to hear us talk about. Sean just went on a really strong 20-minute rant, and I think it highlights, and when I mean rant, I mean a monologue that highlights why I think he's just one of the best people to talk about this stuff, because he's not bullish or bearish. He's giving all these unique perspectives in one place and can actually communicate that stuff to let you sort of form your own hypothesis on it. So good first episode, Sean. I enjoyed it. We'll see what happens the next one. I think the biggest takeaway from here is that, to me personally, was mind-blowing, is that if Bitcoin does become stable with all these transactions, which is the point to replace the monetary system, does it lose the whole allure of it? And I think that's the question that I want everyone in the comments to hopefully engage with and see what you guys think. But it's not financial advice.
Not financial advice.
All right. Awesome. We will see you guys in the next episode.